And good evening, Collins. How are you today? Tra-la-la-la-la. Oh, glasses, glasses, glasses. Need my glasses. Be right back. Don't go anywhere. Need my glasses. Shit. Honey, what you do with my glasses? Oh, bloody raw evening. Here we go, here we go, here we go, here we go, here we go. Yo, 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 yo. All right, got my glasses. All right, ready to roll, ready to roll. What do we have over here? What do we have here? What we have here? All right, what do we got? This. Do that right there. Do this right there. Uh-oh. And that there. And this right there. That works. And we got to do this down here to get this working. So that's working. I'm great. How are you? So excited to get on Zoom call soon. Ooh, hopefully you'll be there in the morning. Ooh, shit. What the hell was that? Grab one of these, take care of that issue. All right, what do we got? What do we got? Farmer. Zilvilla sticks. Zilvilla sticks. That's a weird name. All right. I'll give you that one. All right, who do we got? Latest. Can you grab the camera for a Lamar edit? I'm not quite sure what you mean there, but okay. Papa G's in the house. Luigi, how are you today? All right. That's rolling. That's rolling. Okay. Volume looks good. Let's a little bit louder. There we go. Let's get rid of that. All righty, all righty. Don, Groot, Richard, how you doing? All right, what do we have over here? Uh-oh. That didn't work out, right? All right, who do we got? Crazy Life, Kingfisher, EK, Lamar, Patrick, Gene, Pat Dan Mac. Pat Dan Mac, okay. Damon, Jayak, Easy Living, how are you? Scolger, Kevin, Tim, Joe, Hater, oh, Hater, Hater the Heb, Wampa, good evening again. Debbie, how are you? Scott, how are you? Free Willy, woohoo, Free Willy's in the house. Okay, High Living wants to take a look at Kinder Morgan. Is that KDP, I think? Is that right? Kinder Morgan? Well, let's check it out. KDP. Bunch Jacob, Jacob Bunch. How you doing, Jacob Bunch? Jessica, how you doing? Marcus, David, Bad Peanut. That's an interesting name. Bad Peanut. Tony Moss. Tony Moss. All right. Daiquiris. Jim, how you doing? Muke, Steve, Debbie. Vegas. Vegas wants to take a look at Apple. All right, all right, all right. Good evening, everyone. My name is James. This is Dividend Stock Talk, brought to you by the 10-Minute Trader, where I invest in dividend stocks, answer all your questions, show you how I've been doing it for the past 15 years, looking for a simple, safe, predictable, consistent 1% per week. Now, 1% a week is over 50% per year. It's not that difficult. Created for a 9-year-old. Hey, what's happening? You have a question. Go ahead. I just crawled back up to the surface. Lord Cheese. How can you move Bitcoin and it not be traced? You can't. Okay? It has to do with, what do you call that? Blockchain technology. So blockchain technology, basically you're taking a block of data, okay? Ins, outs, all the accounts, okay? So each account number is tracked and it goes into a certain block. So it's like everybody agrees what it is. So this account gives money to this account gives money to that account. Now, there are no names on the accounts, but there are ways of tracing it because, the account you have has a certain number to it. Okay, so you may think it's anonymous, but there are ways of finding out who is and who's sending money to who. Okay. Are you on Instagram or TikTok in the morning? I'm on TikTok in the morning. I'm not on Instagram in the morning, only at night. Ahmed, how are you doing? Satoru, how are you? Noodles. Oh, Noodles got a scam for us. Way to go, Noodles. All righty, all righty. Garabo, what's going on? Okay, so the first one we're going to look at today, let's look at STZ, and then we'll take a look at Apple, because STZ is already up, so we might as well take a look at it. All right, so Noodles, if you could do me a favor, fiduciaries, are you bonded? I have no idea what you're talking about. I'm not a fiduciary, and I'm not bonded, and I don't know why I would need to be bonded. Hey, wise words. Thank you for sharing that. David, good morning, good morning. All right, first one on the list. Now, I do everything, 1, 2, 3, 4, A, B, C, D, one at a time. And it's always the exact same. Every time I look at a stock, it's always the exact same. Into the blue, how are you doing today? So let me quickly show you what I'm looking at, okay? Now, anytime I look at a chart, I'm looking for 5 things. Just 5. Okay, number 1, the high. Number 2, the low. Number 3, where was it a year ago? Number 4, where is it right now? And number 5, where is it going? Down, up, down, up. Simple, right? It's not that difficult. It should take you 3 to 4 seconds to take a quick look at what the stock is doing. Basically, down, down, up, down, up. Okay, fine. Currently, the current price at this moment in time, 166.42. If you've been here for a while, you know I like to do covered calls. They're simple, they're safe, they're predictable, they're easy. Okay, the stock doesn't even have to move at all, and I still know what my profit's going to be. All right, so the 165, that's not good. Last trade was 166, but the new number is 165. That just tells me that the market maker is going to push the stock down tomorrow. I don't know. Or is that just the after hours movement? Amador, you got a question there? Oh, I'll take a look at it. All right, so the 165 is going for 550. Well, that's a nice premium if you think about it. And that's for 2 days. Holy cow, that's a good number. Okay, Dom Authentic, what's up? Repent and believe. Oh my God, no, don't even. Don't even. All right, gotta love it. All righty. Usually high dividend stocks keep falling in value. Okay, I'm not looking for high dividend stocks. Okay, I'm looking for the boring stuff. Companies that have been around for over 100 years, they only pay 3 to 4% per year. Those are the ones I'm looking for, because even though the yield may be 2, 3, 4% per year, I'm not looking at that. What I'm looking at is the premium on the option contracts that I get to sell against them. So if I buy a stock like Johnson & Johnson, AT&T, General Motors, IBM, something like that, okay, yeah, the yield for the year may be low, but I'm not looking for the yield. I'm looking for the dividend, not the dividend, the premium. So just sit tight, relax, watch. Everything will come together in the end. What do we have over here? Jackson, how you doing? Jackson Paradise, how you doing? All right, what do we have? Edward, what stocks has Nancy Pelosi been buying and selling? No idea. I don't pay attention to her. I have a different strategy than she does. Number 1, I don't cheat. She does. Anyway, let's keep on looking. STZ. So, do you like STZs? That's going to be a big question. Okay, do you like it? Do you even know what they do? Okay, but take a look at the numbers. The high of the year is like 265, and the bottom is down here at 160. That's like $100 drop from the top down to the bottom. Well, that's a big drop. So you're going to make most of your money in the stock market buying low and selling high. Well, at this moment in time, you're not going to get STZ any lower than the bottom of the year, which looks like it was last week. So let's take a deeper dive into it, because we already know the numbers look good. So let's keep on going. So the high of the year for STZ was 264. The bottom of the year was 159 or 158.81. All right. So the last 30 days, right there, is what I'm mainly looking for. And the main reason I'm looking for the last 30 days, okay, 5 things. You ready? The high, the low, where was it? Where is it? Look at the motion. Down, up, down, up. Get 2 days to the upside. Well, on the third day, which would be tomorrow, would be a deciding factor whether or not I get in. Because I like 2 days the upside from a bottom. Well, the bottom's right there. Okay. Yesterday was higher. Today was higher. Now, if tomorrow opens up above 166, well, I'm going to jump in. Because on the 30-day high, you get some profit taking, and it drops, gets down to a point where people like me say, holy cow, we got Constellation at 160. Well, why the hell not buy it? If you like the stock, of course. Dogs talk. Absolutely. Different companies every week. You got to remember there's over 10,136 companies available. We check every Monday. Every Monday we look to see how many different stocks are available. What are we looking at right now? Okay, that silver guy, we're looking at STZ. Okay, Sam Thomas Zuenski. Or Zootopia, whatever. But yeah, STZ. Okay, yes, dogs, it's a different company every week. What are the advantages and disadvantages of preferred stocks versus common stocks? Well, preferred stocks, more than likely, we're not allowed to buy those because they're basically preferred. They go to certain investors, which we end up buying common stock. But you might have an opportunity to buy preferred stock. Okay, preferred stock, you actually have voting rights, where common stocks, you don't get voting rights. Cold drink, warm drink. The warm drink helps the throat. Cold drink soothes the thirst. All righty, that's good. Buy all dips, you keep laughing at me, but just to buy a dip, you can't lose. Also, make sure you laugh at the sellers when you are buying. All right, Kabir, Kabir, is that right? Now, we've had this discussion before, okay? For somebody like you, perfectly good example, okay? If it works for you, great. Okay, Eileen, how are you, Miss Eileen? It might work for you, but you have to remember where you are in life. Okay, I'm retired, which means you say buy the dips. Okay, there's the dip right there. Great, now what do I do? Okay, you buy the dip, now where? See, I need cash flow on a weekly basis. When you're retired, you rely on someone else for your money to come in. Either Social Security, a pension, a 401k product that you take disbursements on, but the money's got to come from somewhere. When you stop punching a time clock, okay, the money still has to come in. So what you're talking, buying the dips, great. So I buy the dip, great. Where's my income coming? You don't get income until you sell something. So just buying a dip, what then? Okay, and it's like you're giving me half the equation. So buying a dip, great, wonderful. It's a great advice. But at what point do you buy? Okay, so from up here, 180, she dipped down and hit 160. Shot up, then pulled back again. Now she's at 160 again. 2 days to the upside, great. Now what? So while you're thinking about now what, let me finish what I'm looking at, because for me, it's been working for the past 15 years. Okay, simple, safe, predictable, consistent, 1% per week. That's over 50% per year. And I am perfectly happy getting 50% of my portfolio as a return every single year. Give you an example. If I have 20 grand, 50% is 10 grand. If I have 50 grand, 50% is 25 grand. If I have 100,000, 50% is 50,000. If I have $1 million, 50% is 500,000. Whatever your portfolio is, half of that, well, is 1% per week. Okay. All righty, Eileen, I appreciate that. Thank you very much. I am Dog Stock on TikTok, by the way. Oh, Collins, got it. So Collins, why are you on two different? Yeah, you can do two different channels if you want. Nothing wrong with that, I suppose. Many people are on two different channels. Weird. Anyway, so for those of you that are new, this behind me, this chart, that is live on YouTube. It's recorded every single night. So if you have any questions, you have you want to see something over again, well, just go to YouTube after we're done, the10MinuteTrader.com, and then just watch the video over again. All right, anyway, let's keep on going. Oh, so STZ. Yeah, well, let's take a look at it, the 165s or the 166s. They don't have 166. They got 165. All right, so let's take a look at it, 165. 165. Now, when I say I do covered calls, I use Thinkorswim, which is through Charles Schwab. I am Legend. Hey, sir, please advise on Target and Emerson. Okay, Target and Emerson. Okay, I am Legend. Give me a minute or two. We'll take a look at those next. Okay, so on Thinkorswim, everything is preset. All I have to do is pick which trading strategy I want. So I want to do the covered calls. Now, there are a lot of people out there that will teach you all of this stuff. I'm only doing this one because I think too much information is just not a good thing. You get what's called information overload. Okay, so we got a question over here, or is that just noise in the background? Amador. Uh-oh, Eric and Amador. I gotta mute your microphones. All right. So if you got a question, unmute yourself and just ask. Okay. Other than that, if you have any questions, just chime up. All right. Anyway, as I was saying, MBM. Who wrote? Does that make sense? It looks misspelled. You think it's misspelled for a reason? Think about it. It's misspelled for a specific reason, to see if anyone's paying attention. And you were paying attention. Good for you. White excellence. I have no idea what that means. All righty. Who do we have here? Hey, Pressure's in the house. Fendi's in the house. All righty. Okay, so let's keep on going. So like I said, Thinkorswim, which is offered through Charles Schwab, they haven't changed this trading platform in over 20 years, which I think is awesome. Because being an older person, I don't like to learn new things all the time. Okay, I'm past the point of learning new stuff because I'm retired. Why do I need to? No, I could if I wanted to, if it was interesting. But it's basically the same thing as it's been for the past 20 years. If it ain't broke, don't fix it. I think that's a great philosophy. All right, so I'm going to choose covered call because it's simple, it's safe, it's predictable, it's consistent. It is so safe they say we can do it every single day. No, actually, the covered call or the covered stock is a very safe trading strategy. You actually can do it in your retirement account. Now, certainly, most of these strategies you cannot do in your IRA or your retirement account because the government considers them as too risky. But covered call, not risky at all. Okay, now, covered call. I said we wanted to do the 165s. Here it is, the 165. Now, I only want to do one contract. Okay, so we all know if one contract is going to be this, well, two contracts are going to be this times two. 3 contracts, 4 contracts, same thing. I'm just going to show you one contract. That way you have a good idea how many you can get. Sorry, here's what it looks like. Here's what it sounds like. I always tell people, read it out loud to make sure it makes sense. Buy one. Covered call, STZ, 100, which is the weeklies. 3 July 25. Now, this is weird because we got 2 days left, and it's still giving a huge premium. Huge premium. The $165 call option against the STZ stock at the market to open to open. Now, I did not stutter. I did not repeat myself. To open means we're opening two orders. We're buying the stock, we're selling the option. That's two separate orders. Okay, the stocks go to New York, the options go to Chicago. Think of it that way. Simple, easy. Chicago, New York. New York, Chicago, whatever. Okay, so maximum profit right there. Maximum profit, 570. Now, remember when I said I want simple? Covered calls, one of the simplest strategies there is. Safe, it is so safe they say you can do it in your IRA. Ooh, I like that. Safe, so safe they say you can do it right in your IRA. Predictable, I already know what my profit's going to be before I do anything. Now, if you buy a stock, well, you got to wait for it to move before you can sell it, before you know what your profit is. That doesn't work for me. I'm a little weird. I don't know. What do you want to say? I know what my profit's going to be before I even do the trade. Well, that way I can make sure it's right for me. Okay? And number two, predictable. Okay? Remember I said, wait a minute, consistent, sorry. Simple, safe, predictable, and consistent. Well, I say I only want to do weekly options. Well, because a weekly option, I can do it every single week. So this week here, if I'm going to buy STZ tomorrow, I can sell it to somebody else for almost the exact same price I just paid for it. Well, that means I know what I'm going to get. And if I don't get that, if that person, whoever buys that option, doesn't buy the stock from me by the end of the day on Thursday, because there's no trading this Friday because of the holiday, okay? If he or she doesn't buy it by Thursday, I still get to keep this money. And then next Monday, I get to sell it to somebody else. I think that's freaking awesome. Every single Friday, I can get a predictable rate of return every Friday or every Monday. However you want to look at it. Okay, so that being said, I'm looking at it in a totally different way. Okay, now I've been doing it for a while, but recently there's been a wave through the internet, something about cash producing assets. All right, fine. Well, people buying cars and renting them out. People buying houses and renting them out as a B&B or just like a Verbo or just a regular rental. Okay, a cash producing asset. That's where you put a big chunk of money up front, and then every month or every quarter or whatever, you get a return on that money, or somebody pays you. Well, I'm doing the exact same thing with the stocks. So let's say, hypothetically speaking, okay, you buy the house next door. Now, the average price of a house nowadays is $400,000. Wow, 400 grand is the average price. Okay, great. So if you buy a house, 400 grand, well, the average rent is like $2,500 a month. Well, $2,500 a month on a $400,000 investment, some people might think, hey, that's great. That's 7 or 8% per year. Well, look at it this way. If I took that $400,000 and I bought me a cash producing asset such as STZ, 400,000 into that, I got 1% every week. Think about it. You're going to buy a house, you're going to get $2,500 a month. Okay, I'm going to buy exact same amount of money, 400,000 into STZ, 1% a week. Well, that's $4,000 a week. That's $16,000 a month, not $2,500. But anyway, yeah, these go up and down, up and down. So am I going to get that 4,000 every single week? No. Sometimes I'll get 4,000. Sometimes I get 5,000. Sometimes I get 2,000. Sometimes I get 3,000. It's a cash producing asset that produces cash on a weekly basis. So whatever you do with your money is totally up to you. Okay, this works for me, and this is what I'm going to do. Oh, oh, that was a good one. Whew. All the way through me. Thank you. That was like, rattled the bones. All right, so let's take a look at the rate of return for STZ. So if I buy one contract of STZ. One contract is going to give me $570 a week, or this week. Next week, it might be more, it might be less. Don't know. It's a weekly basis because stocks go up, stocks go down. As stocks go up, as stocks go down, it directly affects how much we're going to get on a weekly basis. Okay, fine. 564 is cost me $1,600. So let's do some quick math for that. Let's get my money machine calculator. And I got to come up with a different name. Okay, 564. And then we take the profit, 564, and we divide it by what my investment is going to be. So my investment, 15,936. Divide 15,936. That gives me a grand total of 3.5%. 3.5. Do you have any idea whatsoever? Okay? Any idea whatsoever 3.5% every single week is? It's got to be over 100, I'm going to say 160. Let's find out. Multiply this by 52. 180. Damn it, I was close. I don't know, wasn't I close? Got a question. I know you hold a stock for 1% to 2%, but do you ever hold it past 2%? And if so, what is the strategy you go by? Okay, Matt, that's a good question. There are lots of strategies, Matt. Literally, lots of strategies. Let me show you some of them. Hold on. Let's get this out of here. Let's get this out of here. Let's get that out of here. Let's do this right here. Okay, so Matt, here are all the different strategies that you can do with options. Single, vertical, back ratio, calendar, diagonal, straddle, strangle, covered, collar, synthetic, butterfly, condor, iron condor, vertical roll, collar with a stock, double diagonal, unbalanced, and then there's deep and wide. There's a whole bunch of strategies you can do. Now, I only give away one for free, okay? Eileen, thank you for that, but if you could do me a favor, Eileen, just do it once, okay? Just upload it once. I can see it here, fine. But Eileen, I got 7 different channels that I'm working on, or 7 different cameras, which is about 9 or 10 different channels. So I see the question, I see what you wrote. You don't have to write it 10 to 15 times. Once is perfectly fine. But thank you, though. Yeah, have a great day, Miss Eileen. All right, so that being said, all these different strategies, which one do you want to do? Well, if you remember, now some of you knew, some of you've never been here before. The trading strategy that I'm giving to you for free, I'm not charging anything for it. I will answer whatever questions you have directly related to the one trading strategy that I'm giving away for free. Okay? It was created for my 9-year-old daughter. Okay? And back in 2008, when my daughter was 9, she's going to be, holy cow, she's going to be 26 in a couple of weeks. Holy shit. I'm not ready to have a 26-year-old daughter, which is kind of weird because my son is 36. Do I look old enough to have a 36-year-old son and a grandson? No, I'm certainly not mature enough, I can tell you that much. Anyway, so these are all the trading strategies. I only give away one for free. You will never hear me try to sell you something here unless somebody specifically asks. Okay, so if someone asks, yeah, I will tell you about it, but I'm not going to go into a deep pitch. You're not going to hear me pitching anything. We're all adults. We all know how it works. Yes, I've written a bunch of books. Yes, I have a study course. Yes, I have an online paid trading group that you can actually watch me trade and ask me hundreds of questions. I have all that. Okay, we're all adults. We know how it works. I'm not going to try to sell anything to anybody. I will answer your questions. I'll show you everything I do to get what I get. And I also post all my trades online in 3 accounts. I got 7, but I'm only going to show you 3. I think that's more than fair. All the way from South Africa. Woohoo! Yeah, George. Aisha, how are you today? Roxy, good evening. Hemant, evening. Lexus, good evening. Charlie, Adam, Eagle. What strike price would you sell on STZ? We just did that, Eagle, the 165. The 165 has an awesome premium. But remember, all these numbers are going to change 9:30 tomorrow morning. Because when the market opens, it's like a not rush roulette. It's like a roulette wheel. The numbers keep changing and changing and changing and changing and changing and changing. I can do it all day long. Actually, about 7 or 8 hours. That's about it. Okay, so STZ. Next one on the list was Apple. Someone wanted to take a look at Apple. Okay, STD doesn't have a long history of dividends. You still like it. Okay, world you want to live in, girl. I did not say it was one of my stocks. Okay, I just opened it up because somebody wanted to take a look at it. You will see me looking at stocks that I personally will not buy, but I look at them because people want me to look at them. Okay? So if you ask me to take a look at Joe's Pizza, I'll take a look at it and I'll tell you I wouldn't buy it, depending on what everything looks like. Make sense? Okay, I Am Legend wanted to take a look at Target. First of all, we got to get out of here. And we're going to put in Target, TGT. Interesting. Ooh, look at that. Now, it should take you 3 to 4 seconds. Literally 3 to 4 seconds, because you're only looking for 5 things. Okay? High, low, was, is, up, down, up. Okay, not that difficult. 3 to 4 seconds. That's all it should take you. Once it passes that, then we go over to the numbers. If I buy it tomorrow, what is the covered call going to give me as a return on my investment? Okay, it's at 104. The last trade was 103.85. So the 104s are going from 101 to 109. But that's for 2 days. Okay, that's tomorrow and Thursday. Well, let's not do that. Let's do next week. That gives us a little bit more time, and a little bit more time means a little bit more money. So the 104s for next week, 226. Well, 226 on the 104 is close to 2%. Now we know 2% a week is over 100% per year. Can you imagine doubling your money every year? That'd be awesome. Okay, but it is going to take a little bit of time. You do have to weed and water your garden, so to speak. Okay, if you have a dog, you got to feed it and you got to walk it and you got to clean up after it. Okay, why not treat your money with the same respect? It's just a question. Okay, most people, okay, a lot of you guys in the audience, most people spend more time planning a family barbecue than they do with their personal finances. Well, I tell you what, your personal finances are going to be more important when you're retired than that family barbecue was. Because family barbecue is going to come and go. The money for me has to last me the rest of my life. Because I have no desire whatsoever to go punch in a time clock again. I might do it just for the fun of it, just to get out of the house, find something to do. After I got like a list of 37 projects in my house. 37 projects. It's like every time I come up with a neat idea, she says, "No, you have enough projects. Get them finished first." I said, "Well, I can tell you exactly the status of each and every one and why it is stalled where it is and what has to happen in order to go forward." Anyway, got like 37 projects. I don't need any more. All right. What do we have now? White population just goes down. Is this bullshit bearish? Okay, see, I really don't want to deal with people like this. All right. Still haven't reversed the background so viewers can read it. Mr. J, okay, hold on a second. Mr. J, you're not the first one to tell me the exact same thing everyone else has been telling me on YouTube. But I'm going to tell you one thing, see if you know the answer, okay? Now, YouTube, as far as I know, okay, doesn't have a little button in which I can push to mirror the screen. Now, TikTok does. So if you go to TikTok, it reads normally. YouTube doesn't have the capabilities to do that. So until it does, we're stuck the way it is. Okay? Now, I don't pretend to be technologically advanced, because I'm not. Funny story. This is a funny story. I bumped into to Steven Tyler one day, and my girlfriend at the time asked, "Hey, we get a picture?" He says, "Yeah." So he hands the picture, takes the phone, and he hands it to his daughter. He says, "Yeah, I can't figure these damn things out. I'm technologically retarded." It's kind of funny because, anyway, besides the point. I thought it was a funny story. Nice guy. He's actually, just a regular guy where I come from, because he actually comes from my hometown. And you can just bump into him on the street, and it's like, everybody leaves him alone. It's just Steven, He lives there. Everybody knows him. Anyway, he walks around town like, and nobody bothers him. And I think it's awesome. The guy he's an icon, right? So you think there's always a crowd around him, but no, not in his hometown. In his hometown, he's just Steven. All right, anyway, so we're taking a look at Target. High, low, was, is. Look at the motion. Up, down, up. All right, so it's at 103 right now. The 104s look pretty appetizing. But here's the thing with Target. Target is one of those few companies that have what's called a black swan. Often. So often that I try to stay away from Target during earnings reports and during dividends. Because this is what happens. You see this? Let me zoom into it so you get a better look at it. Okay. You see that? 156. Very next day, it drops all the way down to 120. That's called a black swan. A black swan is one of those things that happens once in a blue moon, because you don't see it very often. However, Target does it at least 2 or 3 times a year. What was that? All right, I got some noise in the background. Who's that? Ruben. All right. Ruben had a little bit of noise in his background. All right, so you got to be leery with Target. And there's a few others that do this, but Target is notorious for doing this. As a matter of fact, I think it was $15,000 on Target because of a black swan. Okay, I had it at 135, and it was currently at 102. And it jumps up to I forget what it did. It was like 2 or 3 years ago. But I did, overnight. Woke up in the morning, it's like, oh man, that's... It did. It was... Anyway, so you got to be watch out for black swans with Target. Let's go back over here. Where are we? Last 30 days, right there. Okay, so take a look at Target. 30 days ago, we're at 93. Then we dropped down to 92. Shoot up to 102, drop back down to 94. Now we're at 104. Okay, look at the nice upward trend. Great. Well, where is the dividend? Because I want to stay away from the dividend, and I want to stay away from the earnings report. So let's put it right here. TGT. Okay, dividends and earnings. Not in July at all. Not in June. May. There it is right there. All right, so May, okay, here's the dividend, here's the earnings. June, July, August. All right, so they're not going to have a dividend or an earnings until sometime in August. Great. That means it's an opportunity for us to take advantage of. All right, let's get out of this. All right. So we're not going to see the earnings or the dividend for Target for at least 4, 5, 6 weeks. So it's not a big risk at the moment. So let's take a closer look. So we like the 104s, but here's the thing. Okay, 30-day bottom. Now we're at a 30-day top. Is this something you want to jump into? Well, let's backtrack a little bit. Okay, here we are in January at 145. She drops down to here to right around 85. And it's a slow upward trend. Now, if you're looking at it for, the 6-month chart, well, yeah, it should keep going up slowly. But I'm looking at the 30-day chart. Now, long-term play, yeah, fine. Now, I don't do things long-term. I go for 5 days, Monday to Friday. So would I do this? No, I wouldn't, because it's way too close for me. Okay, here's your 30 days. Here's your bottom, jumped up, pulled back, now it's going up again. It's a little too high for me. It's a 30-day high, and I don't like 30-day highs. I am legend. Okay, thank you. World you want to live in, girl. Okay, world you want to live in, girl. Can you come up with a shorter name? Betsy? Tina? All right, thanks. You're welcome. Mikey G, Riley. Ooh, let's take a look at Mikey G's. Riley. I like Mikey G, Riley. All right. Now, we're going to do Apple, too. Somebody asked me about that. Now, Riley is one of those ones only good for the, what do you call that? Diehard investor. I think so. All right, anyway, so we're up here at 22 a year ago. Now we're down at 321. Can you imagine that? 22. Now we're at 321. The bottom of the year is 276 or 267. Can you imagine that? 22 down to 267. What is that, like a 95% drop? Well, why the hell would anyone buy it at a 95% drop? Well, I did. I bought it down here, right around $3. I think I'm in it at 297. And I keep rolling forward the $3 option, because look at this. I know stocks don't go sideways, because they go up and they go down. That's about it. But it looks like it's channeling. That's what it's called when it's going, looks like it's sideways, but it's actually called channeling between 290 and 6. Okay? So let's take a deeper dive into it. D. Hurst, I need to flip 5,000 to 10,000. What can I do? You probably should go someplace else, because you're definitely in the wrong place if you're looking to double your money. Okay, unless you want to double it in 2, 3, 4 years. Okay. That being said, let's zoom into this one a little bit closer. The last 30 days, right there. Check it out. This is the last 30 days. 30 days ago, we're just above $3. And then we dropped all the way down to 267. Okay, and then we jumped up today, 330. Well, I sold the 3s for next week. Well, it's in the money now. Well, I honestly really don't care, because I bought it at 297. Look what it's been doing for the past couple of weeks. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, all in this area right here. So every single week, I would roll it forward and pick up 2 or 3% for RILY every single week. But RILY is one of those stocks you cannot do margin. It has to be all cash. Well, I have margin accounts. All right, so let's take a look at RILY at 350. All right, well, let's look at my RILY at 350. For those who like RILY and skating on the edge, kind of like Mikey G and a few others. So I don't mind RILY. It is risky that they don't have the dividends, and it's not that old. Anyway, covered call. Here we go. And we said the 350s right there. One contract right there at the market. Here we go. And here we go. Buy one covered call of RILY 100. That's the weeklies. 11 July 25. That's not this Friday. That is next Friday, which means the option's going to expire on Friday. $3.50 call option against the RILY stock at the market to open. We've heard that before. 2 orders, buying stock, selling the option. What are we collecting? $40.50. Well, that's kind of crappy, isn't it? But we're only paying $310 per contract. Well, $310 is not bad. if you're looking for a cheap stock to get into, $310 for, think of it this way, all right? You're creating a weekly cash flowing asset. This asset is going to cost you $310, and you can sell this option against this asset to bring in cash flow every 7 days or every week. All right, so let's see what the numbers look like with my calculator. $40.50, that's the profit. $40.50. And what is it costing me? Right here. Cost of the trade, including commissions and fees, $310.16. Well, let's see what it looks like. Divide 310, 16, grand total of, that can't possibly be right, 13% for 1 week? Think about it, 13%. But you gotta like that stock, RILY. Now, more than likely, RILY's not gonna hit. Hold on. Do you trade at the beginning, end of quarter? Why not? Okay, OB. I buy on Mondays. Every Monday. Beginning quarter, end of quarter, I honestly don't care. Every single Monday, I'm buying something different. Every single Monday, I am selling a covered call on every single position that I own. There's not one position under my control. Actually, there's one under my control that is not a dividend stock. And that is, that doesn't have options on it. And that was something I inherited from someone else. So that's crazy. 13% for 1 week. But it's normally not going to hit. What are we calling? Where are we? It's probably not going to hit 350. Okay? Because the bottom is right here, 276, and we jumped up to 330. More than likely, there's going to be profit taken. This thing's going to come back down again. Normally, probably. Is it ever going to hit 350? Probably not. But do you like it enough to buy it and create a cash flow every single week? It's a cheap one, $30. Is that $310 to buy one contract? I mean, to do one contract. Tim Anderson, when you sell covered calls, does it have to be in 100 shares if the stock for one option? Yes. One option for 100 shares. 200 shares, 2 options. 500 shares, 5 options. Matt Evans, am I a millionaire? It depends on how you're adding it up, Matt. Okay? So what are you counting? You know what I mean? Oh.
If you were to do the 310s, you would be at 4.3%.
They don't have a 310. They have 3s and 350s.
Thought I saw.
Nope. 152, 253, 354, 455, 50-cent increments.
I figured it on the 3s. The 3s would be 4.3.
Would it really?
Yeah.
Okay. Well, let's give it a try. Do the 3s. But wait a second. Hold on. Okay, the current price is $336. The 3s are going for $226. So that's $1.90 you're walking away with. Well, that's not bad at all. $1.90 per, that can't be right. $1.90 per share on a $3 stock? That's nuts. I think I'm going to buy some. Well, I have enough of them. I think I got 9 cents this morning. 9 cents. Look what they're offering now. Yeah, that's crazy. Anyway, next. I have 10 covered puts on TSLA right now. Bodie, I have no idea why you would do that. Matt Evans, hell yeah. You rich, poor people don't tap their TV like that. Really? I can do whatever I want. I got like 5 of them in here. Wait, 1, 2, 3, 4. All right, so I only got 4 of them in here. 2 in the other room. Matt, another question. I have been trying to understand the best time to enter a stock. Can you please teach me how to do it because I can't do it for some reason? Matt, I honestly don't know what to tell you. Okay? So, basically, Matt, to buy a stock, it's very simple. You put your cursor there. Okay? It pops up right here. You hit confirm and send like that. Here comes the order right here. Buy whatever, whatever, whatever. And then you hit the send button. That's it. And then tomorrow morning when the market opens, that order will fill. You have to, I don't know how to answer that question. Because in order to trade, you need a trading platform. You need to open up a brokerage account somewhere. Robinhood, Acorn, Webull, Charles Schwab, Fidelity, whatever trading account you want to do. And then you have to fund it. And when you do that, all you do is just press buy and send. And it automatically goes to the broker. They fill it and they say, hey, you're the proud owner of, 500 bouncing baby RILYs or whatever you want to buy. Okay, buying a stock is easier now than it was when I first started. Could you share a brief story of how you got into trading? OB, all right. A brief story how I got into trading. You might not like it, because not many people do like it. Okay? When I got out of high school, I joined the service. Okay? Served my country. Got out of the service, and then I joined as an apprentice to a gentleman who built exhibits for museums and public aquariums. So if you ever go to a public aquarium or a public museum, okay, those exhibits you see there, yeah, people like me built those. Okay, so at one point, he signed a contract with a big manufacturing company, and he moved his operation to the Philippines with his new Filipino wife. He actually had a mail order bride. Well, she was a nice girl. But anyway, he left and he didn't take anything from the shop. He just said, throw it out. So I said, okay, fine. You're leaving the country. So I took all the stuff he was going to throw out. I took it, moved to Florida, and I started my own business. Not selling to museums and aquariums. Well, I did sell to museums and aquariums, but I also sold to the general public. Because after a certain size, okay, I did aquariums, basically. After a certain size aquarium, the most common one was a 55 gallons, 48 inches long, 19 inches tall, and 13 inches deep. What are you going to put into that thing? You're limited. So I started creating these pieces of art, and then I used to reproduce them, latex molds, silicone molds, fiberglass, polyester, all that kind of nice, neat stuff. And then for the next 13 years, I did that exclusively. I had my own manufacturing company. And there was nobody else making artificial coral for the home hobbyist. I was the first one to do it. Okay, and this was like 30 years ago or something like that. 30, 35 years ago. But anyway, I was the first one to do it. I literally went door to door to all the big pet stores in the area. So I would go to a pet store, and the guy who said, I'll take everything you can make. So after about 2 or 3 truckloads, he says, wait a second, hold on, I can't take any more. Let me introduce you to my friend Mark in Tampa. So Mark in Tampa says, I'll take everything you got. So after about 2 or 3 truckloads, he says, hold on a second, I can't take any more. Let me introduce you to my friend Mike in Lakeland. Okay, so the deal I had with all these pet stores was, if you bought X amount from me on a monthly basis, I wouldn't sell to anybody else in the metropolitan area. So this town, you had to go to this guy. This town, you had to go to this guy. So after a while, I got a call from someone down in Miami. He said, I tell you what, I want all of Broward County and I want all of Dade County. I said, well, great. It's going to be X amount per month. She said, no problem. So I was making so much money, I didn't know what to do with it. So I started investing. Okay, real estate, antiques, collectibles, and then finally the stock market. Well, if you know anything about real estate, collectibles, and art and all that kind of stuff, well, it takes a little bit of time and effort. The stock market, no employees, no overhead, no inventory, no electric bill, no OSHA, no regulations. All I have to do is just buy and sell stuff. It was kind of like a no-brainer. And then in 2008, when my daughter says, Daddy, what are you doing? Can you teach me? Can you teach? A 9-year-old little girl says, Daddy, can you teach me? Okay, so teaching a 9-year-old, it had to be simple, safe, predictable, consistent, and no way for her to lose. That's the 5 criteria I had to overcome. So for a 9-year-old, the rules were simple. If it's not on the list, no. What do I mean by the list? I only invest in companies that have at least 2 decades of profitability and weekly options. That's it, just 2 criteria for the stocks that I like. 20 years of profitability and weekly options. That's it. If it's, okay, so rule 1, if it's not on the list, it's no. Rule 2, never sell at a loss. Rule 3, make sure the company's consistently profitable. Rule 4, weekly options only. And rule 5, make sure the numbers work. Now, for a 9-year-old, it took 15 minutes to explain it to her. I said, honey, okay, hold on, let me show you this so you understand it. Okay. Now, every single dot, every single green dot you see here represents a company that has 25 years of increased profitability. Okay, so if it's on the list, it's a yes. So this week, these are the only stocks I want to look at. Next week, these are the only stocks I want to look at. The week after, that's it. Okay, the first week, that's May. I don't want to look at May. Okay, first week of July, this is all I want to look at. That's it. Second week of July, that's all I want to look at. That's it. If it's not on the list, no. Okay, so for the first week of July, I don't want to look at this one. I don't want to look at that one. I don't want to look at that one. Just the ones on the list. That's it. So for a 9-year-old, it was simple. If it's on the list, those are the only ones we're looking at. Okay? So the aristocrats only. No. Dividend kings, dividend aristocrats, dividend champions, dividend contenders, and then Warren Buffett's list. Okay, this is only a partial list. Okay, this is only 25 years of increased profits. It doesn't take care of the contenders, it doesn't take care of Warren Buffett's list, and it doesn't take care of the kings. Okay, just the 25 years. So I have like 8 or 9 lists that I look at. So for my daughter, that was it. If it's on the list, great. If it's not on the list, lovely. Okay, and then we look at the chart. Like I show you how I do with my chart. And it's always the same. Every single stock I look at. Where's the high? Where's the low? Where was it? Where is it? And where is it going? Down, sideways. That's it. Okay, let's zoom in. High, low, where was it? Where is it? What's the motion? Up, down, up, down, up, down, up. Great. Where's it going next? Now, by looking at the chart here, it gives you a good idea of where it's going next. Well, most likely with a big jump like that, most likely tomorrow it's going to be a pullback, usually. So for a 9-year-old to see where it's flowing, it's not that difficult. It's like a river. Follow the flow. Okay? The motion of the ocean, the flow of the river, the path through the woods, whatever you want to call it. Up, down, up, down, up, down, up. What do you think is going to happen next? It's logic. Okay? What do you think is happening next? So for a 9-year-old, it was relatively simple. Now it's called the 10-minute trader for a reason. She's 9 years old. Simple, safe, predictable, consistent, and no way for her to lose. That was it. Okay? That's the story. And it worked so well, I said, the hell with everything that I'm doing. I'm just going to do this. Because 10 minutes a day is less than 1 hour a week. 1 hour a week, I can get 1%. So if you take a look at this, hold on, let's bring up the other channel. All right. Oh, we don't want to see that one. Don't want to see that. We want to see this one right here. Okay, so take a look at this and just get a rough idea. Okay? So remember I said I have 7 accounts and I share 3 of them publicly. Account 1, account 2, account 3. The beginning of the year, 151. Beginning of the year, 143. Beginning of the year, 114. So think about it. What's 1% of 151? That's $1,500. So for 1 hour of my time, $1,500 an hour just to maintain that account. $1,500 an hour. Then you get this account, 143. Well, that's $1,400. Account 3, 114. Well, that's $1,100 for 1 hour of my time. Now, how long does it take you to understand it? Doesn't take long at all. Okay? Only do good quality companies. Now, I got 2 criteria and only 2. 1, consistency of profitability. 2, weekly options. That's it. If the company has 20 years or more of increased profitability, why the hell aren't you investing in it? That should be the question. And number 2, what strategy are you using? Are you just buying the stock, waiting for it to go up? Nothing wrong with that. It doesn't work for me. I love covered calls because I know exactly what I'm going to make before I even do the trade. So I look at the trade, I do the numbers. Is it going to work? Is it what I'm looking for? Is it going the right direction? It's not that difficult. Okay, the chart will tell you exactly what it's doing. It went up, well, then it came down. And then it went up, then it came down. It's a numbers game. Okay, a $3 stock. Okay, this morning it was at $2.92. Then it jumped up to $3.20. That's $1.10 move. Now, a lot of you are probably thinking, well, $1.10 is nothing. But $1.10 on a $3 stock. This morning, it was at $3. A $1.10 move on a $3 stock is over 30% move in one day. 30% move, yeah, there's going to be profit taken tomorrow, more than likely, unless there's something going on that I don't know. But me, I personally don't care because I bought it at $2.95, who knows how long ago. And every single week, I'd sell the $3 option. And if it got close to the 3, I'd roll it into the next week and pick up another 1, 2, or 3%. So this morning, I rolled it into next week and picked up 9 cents. Now, I know 9 cents doesn't sound like a lot, but 9 cents on a $3 stock is 3%. Add it up. 3% a week. 52 weeks in a year, that's over 150% return on a $3 stock. Okay, that's not a lot of money. Okay, 150%, what is that? $4.50? It's not a lot. But multiply that by 15,000 shares. Then it adds up. Okay, every single position I have has a covered call every 7 days. I'm creating a cash flowing asset. Okay, so I got 15,000 shares. So 15,000 shares multiplied by $1 and whatever it is, or 9 cents, it adds up. What does weekly options mean? Annie, how are you today? An option, Annie, means I have the right to do something, but not the obligation. It's kind of like cutting in line at the movies. You're just holding the plate. How about this for an idea, Annie? Let's say you have a car sitting in the backyard. Let's say it's a 1974 Volkswagen Bug. Okay? Maybe it's worth $1,200. You push it out in the front yard, slap a for sale sign $1,200. Come get it. Take it away. Now, let's say Pete, the guy down the street, says, hey, I like your car. Let me give you $100. Hold it for me until Friday. Okay, it is a non-refundable deposit. So Friday comes, Pete shows up, he gives you the $1,500 for the car over and above the $100 he already gave you. So you're actually making $1,600. Okay, it's a nice little profit. Well, what if he doesn't show up? What if he gives you the $100 and you never see him again? Well, great. The following Monday, you sell it to someone else, the same thing. Let's say it's Tom down the street, and Tom gives you $100. Hey, hold it to me till Friday. So you got $100 from Pete, $100 from Tom. If he comes back on Friday and takes the car, well, you got 100 here, 100 there, and you got the $1,500 for the car. An option is just the right to buy it at a certain price by a certain date. Now, a weekly option goes from Monday until Friday. Okay? So if I sell an option on Monday, Friday afternoon at 3:59 p.m., your time is up if you do it or don't do it. Okay? You buy it, don't buy it. Totally up to you. It's not obligatory. Okay? It means you don't have to buy it if you don't want to. That's a call option. And it's a weekly call option, which means what we are doing, we're buying the stock at a certain price. And then we're turning around and selling it to someone else at a certain price. So let's say, hypothetically speaking, I buy this stock at $3. And then I turn around and I sell it to Pete for $3. He's going to give me 9 cents a share. Well, however many shares I get. If I have 100 shares, that's only $9. Okay? But if I have 100,000 shares, that's $900. Okay, all it is just another way of making money. Now, I can make money for this regardless if the stock moves. Because when the option expires on Friday, well, it's going to depending on where the stock price is at the moment. Because as you can see, the stock price goes up, it goes down, it goes up, it goes down, it goes up, it goes down. So as the stock price goes up and the stock price goes down, so does the value of the option. So as the stock goes up, the value of the option goes up. As the stock goes down, the value of the option goes down. So what I'm looking to do is buying the stock, $3, selling it to someone else for $3 between Monday and Friday. Whoever buys that option from me, that weekly option, they have until Friday, 3:59 p.m. to decide if they want to take it or not. Regardless if they do it or not, I still get paid the premium. And that premium is, whoops, not there. That premium is right here. So I can collect that every single week. I hope that makes sense. All right. I got questions over here. Thank you for everything. Yeah, you're welcome. Stephen Ashmore. Hems does not have 20 years history. Would you buy it? Nope. So aristocrats only? No. I like aristocrats, kings, contenders, champions. Did Philip Morris ever meet your criteria? Yeah, every once in a while. Stock Banger 23. So you hold the shares and sell covered calls. What does the covered call pay you? Over 1% every single week. So Stock Banger, 1% every single week is 50% per year or more. And then I have no idea what that means. All right, cool beans. What do we have over here? Oh, Annie, you like that? You're welcome. All right. Bodie. Selling options that expire within a week, you sell them. All right. Thank you, Bodie. MBM. What do you tell people who can't be glued to the screen all day or don't want to? Well, see, the funny thing is, I'm only on my computer for 5 or 10 minutes. I have no desire to sit in front of the computer. So I do all my stock trading within the first half hour of the day. I'm in, I'm out. What is this $3 stock? 86. How are you doing today? This is RILY. Okay, I got to go backwards. I missed a whole bunch of questions over here. It's always someone asking about taxes. Okay, hold on. Okay, right about here we go. I gotta stop right there. Excellent question. There we go. Boogeyman had a question. I missed it. Where was it? Nope, missing that one. Okay, stop right there. Oops, right there. Okay. I trade option contracts and want to move more into selling covered calls. There's nothing wrong with that at all. It's slow, it's boring, it's monotonous, it's the exact same thing every single week. But here's the thing. I'm only on my computer doing my own account for 5 or 10 minutes a day. That's it. 5 or 10 minutes a day, which is about 1 hour a week to make 1%. Well, if you have a small account, it's a pain in the butt because you have to get to a certain point where it actually becomes really profitable. Because if you're starting out with 10,000 or 5,000, it's going to take you a while to get to a point where it's actually worth it. Because at a $5,000 account, 1% is only $50. Well, you're spending an hour to make $50. Well, it's not that bad. But if you're at like 2,000 or 3,000, that's a pain in the butt. How do you look up options? iRod. Actually, you have to be approved for options. Now on Thinkorswim, if you're not approved for options, they won't show up. Thank you so much, Stephen Ashmore. I agree with you totally about the no overhead with the stock market. Yeah, well, there is a little bit overhead. I got to pay for the internet service provider. That's it. Now, I don't know if you guys remember dial-up modems. Well, we had to pay by the minute. Literally, when I first started trading, okay, you want to hear something shitty? When I first started trading, we had to pay per minute to be online. That's number one. Number two, we had dial-up modem. So if somebody somewhere in the house picked up the phone, yeah, then you got disconnected. Then you had to do the whole thing over again. And then to make matters worse, it was $250 to enter a position and $250 to exit a position. I was excited as hell when they dropped it down to $125. So can you imagine it? $125 to enter a position and $125 to exit a position? Well, then I was excited when it dropped down to 90, and then it dropped to 80, then it dropped to 75, then it dropped to 50, then it dropped to 40, to 30, to 29, to 15. Now it's almost free. Okay? So I've been doing this for a long time. Income property is expensive to maintain. Insurance costs, skyrocketing, maintenance costs, absolutely. Okay? Get a tax guy. No, I say, okay, stock banger, don't get a tax guy. Get a tax strategist. Okay, a tax guy will just tell you, all right, this is what you're paying in taxes this year. No. A tax strategist will say, all right, if we do this, this, and this, you don't have to pay any taxes. That guy I like. All right. Eminem, what do you tell people? All right, yeah, I already did that one. Bodie, by the way, you can close an option well before the expiration date. Take the profit if it is there green for you. Not necessarily, Bodie, because everybody says that. Well, the stock's going up. Can I buy back that option and sell the stock? Yeah, you can. But guess what? When this option, this morning at $3, the option was 9 cents. Okay? Now at $3.30, it's 30 cents. So it went from 9 cents to 30 cents. It tripled. Okay? The stock went from $3 to $3.30. The option went from 9 cents to 30 cents. Okay? So options, yeah, you cannot buy the option back, sell the stock, and expect to get a profit because the option goes up as the stocks go up. It doesn't work that way. When you sell a covered call, you better be happy with the premium you collect because if the stock jumps, someone else is getting that profit, not you. And you have to be okay with that. All right, Grim Ghostwriter. I don't do long term. Just don't do it. I use 10% of my portfolio on each play. How much do you use on each play? 20%. Income property up. Thank you, thank you, thank you, thank you. Okay, cool. Compound interest. Uh-oh. Stock banger. Have I got something for you? Hold that thought for 1 second. Now, you want to talk about compound interest? You're going to love this. La, 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 la. Now, stock banger, this didn't exist before, so I actually had to create it 20 years ago. This is what's called a weekly compound interest calculator. What it does, basically, you come up with a number you start out with. Then the calculator allows you to put in periodic deposits. So let's say hypothetically you start out with $1,000, and every week you want to put in, let's say, $50. Okay? And then what kind of rate of return are you getting on a weekly basis or a monthly basis? Okay? Hold on. Hold on. Okay? Now, I teach weekly, so we're doing weekly basis. Now, I do have a monthly compound interest calculator also, so it compounds it on a monthly basis. But the weekly, you're going to love this. Watch this. So, if we start out with $1,000, put in $50 a week, okay, at 1%. All right, now I can compound it at yearly or monthly. Let's do yearly, okay? Now let's go for just 10 years. 10 years, all right? Now, does anybody want to venture a guess what $1,000, starting out with $1,000, $10 a week, compounded at 1% per week over 10 years? What do you think? Anyone? Okay, I wonder if anyone come up with a number. Joey, KB, what's happening? And I'm going to go all the way to the bottom. Anybody come up with the answer? Anyone? 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 No one? Nobody has an answer? Oh, Stock Banger says 1 mil. That's it? You just think 1 mil? Nobody else? Nobody else wants to venture a chat? Luke says 50 grand. Anybody else want to venture a guess? Guess? Anyone? Anyone? Starting with $1,000, $10 a week, compounded 1% per week for 10 years. You look like Joe Glass. Oh, Luke says 500 grand. User 61111881111, whatever, so 1.7 mil. Okay. Can I access your community and course on the website? Yes, you can, dogs. Stock Banger says 1 mil. Nobody else gonna get? Uh-oh.
120,000.
120,000. Are you shitting me? Really? We got 80 grand. We got 13 grand. We got 10 million. All right, you ready? Here we go. Okay, 900, 4,900, 54,000, 54,000. So 1,054,000. Lukey, Raul said 10 mil. So who said 1 mil? 1 mil was the closest. Yeah, Stock Banger was the closest. But think about it. $1,000, $10 a week, compounded at 1% per week every single week, comes to 1,054,000. That's the beauty of compound interest. All right, so let's get out of that one. But there's also, what is it? Right there. There's also a monthly compound interest calculator. Okay, same thing. Allows you to put in whatever amount you want to start it with. You can deposit whatever you want on a weekly basis, monthly basis, bi-weekly basis. Yep, Harry for good. The eighth wonder of the world. Who said that? That was Einstein. Compound interest is the eighth wonder of the world. Okay? But the monthly compound interest calculator does the exact same thing. It didn't exist before. How can you tell where you're going to be if you have to keep changing the calculations all the time? So I had to create the damn thing. All right, anyway, let's get out of there. Let's get back to where we were. All right. I just started day trading Monday, and I started on Robinhood. Is it a good platform to start on? Now, I love Robinhood. I don't day trade, but if it works for you, great. You have one, it works. Cool beans. Okay. Cool. Okay, what do we have here? All right. That was a wonderful explanation. You're welcome, Bondi. Fidelity, Vanguard. Yep, that MBM, you'll get market price. Okay. All right. Joshua, how are you? Good. I've seen this guy in the YouTube ad. Yeah, you didn't see me in the YouTube ad. I don't have any ads. He said he's teaching for free, and yet does subscribing to the channel really cost nothing. Okay, so MBM, you did not see me in an ad. I do not have any ads. Okay, Moo Cow, James, RILY not closed in case it do not close early, roll, blah, 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 to let it expire, blah, blah, blah. It's always going to depend on the money, on the numbers, Moo Cow. TD Ameritrade used to be such an amazing platform. Schwab is garbage. Okay, not a question, more of a statement. All right. Isn't it true that 99% of day traders lose money and do not outperform the S&P 500 if they happen to not be negative? I honestly don't know if it's 99%, but a large majority of traders, especially day traders, yeah. Can we look at Abbott Labs? Ooh. All right, well, let's take a look at Abbott Labs, ABT. ABT. Oh, interesting. Okay. High, low, where was it? Where is it? Look at the motion. Up, down, up, down, up. Okay, great. What does it look like? Well, it's at 136. What's the 136 is going for? 172. Well, that works. All right, so let's take a close look at the chart. All right, a year ago, we're at 104. The bottom of the year, 99.71. That was back in late July. The high of the year, right there. All right, the beginning of March at 141.23. Okay, finds a bottom on there, shoots up. Look at the last 30 days. Last 30, right there. Okay, so here's your last 30 days for Abbott Labs. High, low is, look at this, up, down, up. Here's your bottom here, 1 day, 2 day, day number 3 to the upside. That would be my entry. Okay, 2 days up. On the third day, that's where I jump in. Now, 136, 172. Okay, see, the 136 call strike is selling for 172 per share. All right, so let's see what that looks like. Let's get rid of this. Let's change this to coverage call. And let's do the 138. Did I say 138s? No, 137s. 137s. Okay, one contract. And here's Johnny. Buy one covered call, Abbott Labs 100, which is the weeklies, 11 July 25, which is next Friday. 137 call option against the Abbott stock at the market to open. Maximum profit 213. The investment's going to be 13 G's. All right, let's see what those numbers look like. 213. And we're going to divide that by the investment, 13,487. 487 gives me a grand total of 1.57. That's a point and a half. Okay, that's over 80% per year. Okay, 1.5% per week is going to be roughly 80% per year. Are you okay with that? Do you like Abbott Labs? And that's the biggest question. Do you like Abbott Labs at this current price? Are you willing to buy it, hold on to it, and just never sell it and keep doing covered calls every single week? There's your question. Does it make sense? Why would you do poor man's covered call? I wouldn't. Because a poor man's covered call, you got two options, and both of them are going to expire. And as the stock moves up and down, well, you can't always get a good fill on the option price. All right, Frito. All right, Tiny Coco. Could you look at Apple Labs? We just did that. Luke, 50 grand, blah, blah, blah. I have no idea who Joey Gladstone is. What the question? 13 grand, maybe 500. In what equity or fund are you comparing this with? Okay, Max, see, I'm not comparing this with any equity or fund. What fund are you saying this compound would occur with? I'm not talking about a fund at all, okay? I'm just talking about compound interest in the basic sense of what compound interest is. Earns it, doesn't pay it. Okay, pays. What's the most money you've made in a day? A big fat chunk. Good evening, subbed. Why is that sign backwards? It's signed, looks perfectly fine to me. It does. It looks perfectly fine to me. I think it's your computer or your, what do you call it? Okay, Garius, we'll take that question in a minute. How come you don't consider some other data about the company's or consumers' mood than just the up down of the past? Ooh, that is a good question. Let me see if I can explain it to you in a manner in which you'll understand, all right? Let's get out of that. Let's get out of that. Let's get out of this. Let's turn this back to this. Let's go back to here. And let's go back to here. All right. Now. All right. Who asked that question? MBM. How come I don't consider any other data? Well, let me see if I can explain this to you in a manner in which you'll understand. Okay? Adults have a tendency to make this more complicated than it needs to be. Okay? Do you understand that? Adults. That means people over a certain age have a tendency to make this more complicated than it needs to be. All right? So, let's look at the numbers, because I'm a numbers guy. 1 + 1 is going to equal 2 no matter where you go. All right? Now, we are all here with one goal in mind, to make money. Correct? What strategy are you going to use to make your money? I told you what I'm going to use, the covered call. All right? It's simple, it's easy, it's predictable, it's consistent. And the stocks I'm using, boring blue chip stocks. They've been in business for over 50 years, most of them. Some of them have been in business for over 100 years. They're consistent, they're boring, they pay for crap. They do. But the premiums are lovely. That's what I'm looking for. Do you trade vertical spreads? I used to, but not anymore. Okay, vertical spreads, all right, we're not going to get into that. How do you get that list, my friend? The list, are you ready? Dividend Kings, Dividend Aristocrats, Dividend Champions, Dividend Contenders, Warren Buffett's list. Go to Google, in the Google search, Dividend Kings list 2025. Dividend Aristocrats list 2025. Okay, so hold on. I'm going to get to these questions in a second. You guys remember, I got 7 cameras going, okay? 10, I think 9 channels. So I have a lot of questions to go through. So I'm trying to get to all the questions. I'm trying to look at some stocks too. Okay, but I got a question here. Okay, how come I do not consider? Okay, let me explain to you why I honestly don't care about anything else. Okay, we're all here looking for the same thing, to make money. Well, how do we know? Well, stocks go up, stocks go down. That's it, right? Can we agree? Stocks go up, stocks go down. They don't come to your house, take the dog for a walk. They don't come to the house and rake the yard, mow the lawn, trim the hedges, and then take the trash out to the curb. They don't do that. Stocks go up, stocks go down. That's it. That's all. So let's take a look. Here's the bottom here, 131. She shoots up to 137. That's $6. That's about 5%. It's a 5% move. Okay? From 131 to the high 139, that's an $8 move. How much is that? Okay, stocks go up, profit taking, stocks come down. Stocks low, people buy it, stocks jump up. Stocks up here, profit taking, stocks come down. Okay? Then it gets down here, people like me say, oh, Abbott Labs at 133, let me buy some. Now it's going back up again. It's elementary. It's like a seesaw. Up, down, up, down, up, down. You can look at any stock you want. Any stock. Macy's. Okay? Down, up, down, up, down, up, down, up, down, up, down. Any stock you want to look at, they all do the exact same thing. Up, down, up, down, up, down. You find a company you like, you zoom into it, great. Where are we right here? Look, down, it's at the bottom. Shoots up, goes from 14 to 15.75. That's $1.50. $1.50 on a $14 stock is a little over 10%. Stock goes up a little over 10%. What do you think is going to happen? Stock's going to go down. Profit taken. When it gets down to a certain point, it stops, it turns around. It's all mathematics. Okay? Stock goes up a certain percentage. You got people like me. I'm only looking for 1 or 2%. Okay? Okay, here, 14 bucks. What's 1% of 14 bucks? 14 cents. So it started out at 14.25. By the end of the day, it hit a high at 14.65. Well, that's more than 1% just in one day. If I'm looking for 1% every single week and I find the bottom, what usually happens at a bottom? Well, it consolidates and then it goes back up again. And then what happens at the top? Well, people start taking profits and then it drops. How far is it going to drop until people start saying, wait a second, this is a deal, let me buy some. And then it goes back up again. It's elementary. I don't have to look at anything else. Okay, number one, it doesn't make my list unless it's a good company, which means it's consistently profitable and it has at least weekly options and some good volume. What's the volume on this one? 14 million shares. So I don't look at all that other stuff. Because remember, the trading strategy I am giving you for free that I'm showing you here was specifically created for a 9-year-old little girl. Now, I haven't introduced her in a while, so let's bring her on down. Come on down. All right, so where are we going? Right here? Right here. Let's go. Come on. Got to follow the bouncing ball to YouTube channel. All right. Go to the YouTube channel. Oh, wow. It's getting a little slow. All right there. All right. Videos. Okay, because we want to see the video. And we want to look at the oldest videos because there she is right there.
Website called Thingy, which my dad. Hi, I'm JC, and as you being part of my internet website called Thingy, which my dad didn't like me calling it that, but I do. Being part of that, you're going to be getting weekly lists of stocks that I'll be trading, and every week.
There's me, 15 years ago.
21 days in the month of March. What does that mean? That means every single day you can buy a different stock. Every single day there's a different company paying out dividends.
That thing makes me laugh. Every time I see that video, I laugh. I do. I laugh because it's funny. Because 15 years ago, when my daughter was younger, I had to keep her entertained. It had to be fun. It had to be exciting. It had to be something a 9-year-old can understand. Stocks go up, stocks go down. What happens when it goes down? It finds a bottom, it turns around and goes back up again. What else do you need to know? And if we're doing covered calls, well, I buy it at a certain price. I sell it at the exact same price I bought it for. So I'm not even looking for it to go up. Stocks move 3 different directions. Okay? If it goes up, I make my money. If it stays the exact same, I still make my money. Sometimes, if I'm doing an in the money call option, the stock can even come down a little bit and I'm still making my money. I'm not quite seeing why I need to look at anything else. Why do I need to make it more complicated to satisfy just a few people? Adults have a tendency to make it more complicated than it needs to be. Number one, never pick a stock you don't understand or you don't want to hold on to. Number two, never sell at a loss. Number three, make sure the company's consistently profitable. Number four, weekly options only. Number five, make sure the numbers work. It was created for a 9-year-old. Why do you want to make it more complicated? You do what you do. If you want to look at other stuff, you want to look at the Delta, you want to look at the Vega, you want to look at the Row, you want to take a look at the, what do you call it, Black-Scholes pricing option method for standardized options. You want to look at that? Fine. You want to look at the Fibonacci retracement numbers? Fine, do that. You want to look at the MACD? You want to look at RSI index? You want to look at whatever you want to look at? Fine. You do what you want to do. It's been working for me for 15 years. Look at all the, here I have, no gray at all. That was 15 years ago. All right? I was doing it then when life was a lot more complicated. And then I'm still doing and I'm saying the exact same things. All right, let's get out of there. All right. Hopefully that answers your question. Why do I want to make it more complicated? You make it complicated if you want to. Can you please let me know your opinion on vertical spreads? Nobody else knows what they are. I know exactly what vertical spreads are. Okay, they're awesome when they work. You got to remember, a vertical spread is two options. You're buying one, you're selling another, and you're getting the difference between the two. Well, that's awesome. But what happens when it goes the wrong way? Okay, now I did them for years. They were great. And I come to the conclusion that I just don't want to do them anymore because it's too much work. Okay, now when they're profitable, they're awesome. When they're not profitable, they suck real bad. Okay, so every time I lose one vertical option, I'd have to win on 3 to break even. So it was just too much effort. Okay, more time, yeah, when they're profitable, more money. But with more money comes more risk. Okay, I'm at the point in my life where I am perfectly happy with 1% every week. 10 to 15 minutes, 1%, awesome, great. I walk away, it's 50% per year. My life has never been as good as it is now. It just hasn't. Okay, I'm very comfortable where I am. I have everything I need. My kids are far enough away where it's inconvenient for them to just stop by, but close enough to drive. You know what I mean? All right. That's why
I got a question.
Sure, go ahead, shoot.
So you're talking about 15 years ago when you were teaching that to your daughter. Well, 15 years ago you were not 62, which means your money has to be in a certain type of account to be able to have this as income. So, and I'm in a similar situation, I'm not quite 15 years younger, but so when you're doing this strategy in tax deferred accounts, Roth, and you're only 55, you can't even touch anything. You're compounding, right? You're compounding. So there's got to be a different strategy there to where you're trying to get a little bit safer positions, not just random positions where you're just making 1%, but a little bit more strategic because there's a longer term you're looking at, I would think. I just want your opinion on that, where, okay, well, I have a brokerage account which I can take income every single week, no problem, but there's others I cannot touch, but I want it to compound like you were talking about earlier for 4.5 years from now. Man, I'm in a position to now I can start taking from those accounts.
Okay, so I heard everything you said, but I'm not 100% clear on what the exact question is.
The question is the type of equities you're choosing. You go, do you care on, is it energy? Is it consumer products? Is it Walmart? Is it this? Because remember, I can't take those profits. I can't take those premiums because I'm just compounding them. Do I want them to be a little bit safer than the ones that I could actually take this week?
Okay, so correct me if I'm wrong. You want to invest and you want it to compound for the next 5 or 10 years so that you can retire. Is that about correct?
No, so I'm 55. So
Yeah.
59 and a half is when I can dip into my IRAs, my Roths, whatever. So if I'm doing this strategy in those accounts that I cannot touch this week, but then I have a brokerage account that has a good sum of money that I'm living off of and doing your strategy, which is working great.
Okay, hold on.
So
Wait, hold on. So you have basically 2 or 3 accounts of what, is that correct?
correct.
One that you cannot touch until you're 59, one that you actually want to live off the interest on. That about right?
Totally.
Okay, now how are you holding that account? Is it in your personal name?
So
Wait a minute. The account you want to dip into, is that in your personal name?
So the brokerage account that I have now is about to be transferred into an LLC where I can do it as a business where I'm trading over 700 trades a year. So that I'm not worried about that account. I'm talking about the other 4 IRAs and Roth IRAs that I cannot touch and you cannot treat as a business, but I still want to do what you're doing. So compounding that 1% for the next 5 years until I can finally touch them, what I'm thinking is I need to treat those accounts as a little bit more conservative or diversified, if you will, and not just, hey, I'm going to have Macy's, Walmart, have all these consumer products in the same, because heaven forbid the market does something in 4 years from now versus, you and I potentially don't really care over the next week or 2 weeks or 5 weeks or whatever, because we can take those profits that we're earning on a regular brokerage account, if that makes sense.
Kinda. So I like the idea that you're taking the accounts you're going to play with, your play money, and you put it into an LLC. That's an awesome idea because the losses of your business can be offset by the profits of your trading. That's cool. Okay, and also the LLC can buy you a new car every year and use that to offset the profits. People hate that. Like, how much taxes do you pay? Nothing. How do you do that? Well, it's all strategy. All right, so the ones that you can't touch for 5 years, the ones that are in your Roth and whatnot, I don't isolate between consumer products, energy stocks, healthcare stock. I don't. Mine's strictly by the calendar. So whatever's coming up this week is what I'm looking at. I could care less if they're banking stocks or oil stocks or consumer products. I don't care. Is the company consistently profitable? Then it's on my list. If it's on my list, yeah, I'm going to buy it.
They're safe no matter what. You're looking at the same safe products, whether it's something you can make a profit on today or something you can make a profit on 5 years from now.
Exactly.
Premiums.
Exactly.
Okay.
Macy's has been around for what?
Yep. Awesome.
Okay, yeah. So Macy's has been around for over 100 years. Ford over 100 years. Harley Davidson over 100 years. Okay, so just because you're trading one account that you're dipping into, okay, well, 5 or 10 years from now, you're going to be trading the exact same stocks because a well-run company is going to still be here in 5 or 10 years, hypothetically speaking, of course. So as long as you have whatever trading strategy you use to best suit whatever goal you're trying to get, if you're trying to compound your Roth and your other accounts, well, you're using the same stocks. That make sense?
Totally. And I'm using it now. I just didn't know if I needed to adapt or change some things. But yeah, for the most part, I'm doing the exact same in the brokerage account that's going to turn into the LLC account, as opposed to my other accounts that I cannot touch, that I will be able to touch because my wife is, 3 years older than me. And when she turns 59 and a half, then it's game on. Now I have more accounts I can.
Okay, you want to hear something crazy?
I do.
Okay, so let's say hypothetically speaking, you know what an IUL is? universal index life insurance. Yeah, life insurance policy. Did you know that you can borrow money from your IRAs, okay? Put that into an IUL, right? 30 days later, you can borrow money from your IUL, pay back your IRA. Now your IUL is getting 8 to 10% a year, tax-free, uninterrupted. And then you paid back your IRA. So your IRA is still gaining money, your IUL is gaining money, and the IUL is a tax write-off for the business because you are a key owner of the business. And without you, it wouldn't actually work. So you're gaining money here, you're gaining money here, you get a tax write-off here. It's a nice little spider web.
Music to my ear, but yeah, it sounds like a nightmare.
It sounds like a nightmare all bundled up in one time, one chunk. But if you separate it, one step at a time, it's like, how do you eat an elephant? One bite at a time. How do you set up your financial empire so you pay no taxes and you get all this money tax-free? One step at a time.
Yeah, well, I think the problem, and I'll be quick here, the problem's like with Schwab, you need $250,000 in all of your accounts to establish a business account. Then a business account can only be monies that you can, once again, a brokerage account. You can't have IRAs, Roths, those don't count. So, but you can, whether it's 5,000 or 500,000, the 250's got to cross all accounts, which is fine. And then, of course, they got to approve you for that account. But at the end of the day, I'm excited. Okay, we're all good.
Once you get to a certain point, I mean, for most people, it's hard to get to 100 grand. Okay, once you get to 100 grand, well, 150, 200 grand was a lot easier. It's easier to get to 250 than it is to get to 100 for most people.
Yeah.
But anyway,
Yeah. Thank you, James.
Yeah, but when you're there, a tax strategist will really help you.
I already hired one. I'm golden.
Awesome. Hey, you know what?
Yes.
If you could put the name of the tax strategist in either the group chat or the morning chat or the, what do you call that?
Definitely.
What do you call that other thing? The Discord.
I'll tell everybody tomorrow morning, but yeah, I will.
Yeah, because a lot of people have been asking, James, I set up my accounts decades ago. So the account, the person that I use doesn't do it anymore.
Awesome. Okay, thank you.
You got it. All right, so let's get back. Where were we? Okay, Ryan, because vertical spreads work almost the same as covered call, what's the difference? Huge difference, dude. Huge. Now, a covered call is one of the safest trading strategies there is, and it's predictable. Okay, when you buy the stock, you own that stock until you decide to sell it. You can own that for 15, 20, 30, 40, 50, 60 years. An option, vertical spread, they expire. They do. So I can write a covered call on a stock that I own every single week for the rest of my life. A vertical spread, you have to buy an option every single time you want to do it. And that option does expire. And if you're wrong, which 80% of all options expire worthless, if you're wrong, it's going to take you 2, 3, maybe 4 vertical spreads that are profitable to make up with the one you miss. Okay, so yeah. I used to do them because they're awesome. Because if you do them right, stock goes up, you make money. Stock stays the same, you make money. Stock goes down, you make money to a certain point. If it goes down a lot, you don't make anything. Okay, and you actually lose. So as long as the stock doesn't move too much down, okay, if it goes up, great. Goes nowhere, great. If it goes down a little bit, great. But what happens when it goes down a little bit too much? Then you lose both positions. Yeah, I used to do them years ago. They used to be great. They used to be profitable until they stopped being profitable. Okay, that's all the questions there. Okay, we got like 15 minutes left, so I want to get to these questions as I can. MBM, hope you're happy with that answer. What dimension are you in? Oh, John. Yeah, come on. If you don't have something nice to say, John, don't say anything. The 1,000 and the $10 a day. I didn't say $10 a day. I said $10 a week. Yes, but it has to be in something to compound. Exactly. What's a hedge fund? Uh-oh. Okay, Tiny Coco, a hedge fund is where you get a lot of rich people throwing their money into it, and somebody like me trades it for them and takes a percentage of the gains. Okay, so there's a lot of people out there say, hey, take my money, trade it for me, and give me a profit. Okay, kind of like a hedge fund. Okay. Ray, I'm going to get to that question in a minute. I got a lot of questions over here. Luke, interesting. Dude smacked. Okay, thank you. $10 a week. Sorry, yep. Rule number 1, buy high, sell low. Okay, post, come on. Hello, sir. What do you trade? No crypto, no Forex. Yeah, but you could lose out on price increases. Okay, plop, plippity, plop, okay, whatever. Okay, I said right from the beginning, I'm not looking for capital appreciation. I'm not concerned if the stock goes up. It's not what I'm looking for. I'm looking for specifically cash flow. Okay, there's 3 types of stocks that were available to us. One is private companies. Well, you really can't, far and few between. Okay, the other 2. One is a dividend stock, also known as a income stock, and the other one is a growth stock, also known as a something accumulation. So the stocks go up in value faster. So you take the profits on a growth stock. They take all the profits, put it back into the company for growth. You don't get any cash flow. I'm 61. I need cash flow to live. When you retire, you are going to need money to pay your bills. Where are you going to get it from? Okay? So I'm not old enough to get Social Security. So I'm too young for Social Security. So my money's got to come from somewhere. Now, I could go back to work. I have no desire to do that. All right? So the money that I have earned in my working days, now my first job was in 1973, Old Man Simmons Farm. Okay, picked tomatoes, picked green beans, planted corn, did watermelon, blue Hubbard squash, corn on the cob. We even did firewood. But anyway, besides the point. All the money I've accumulated over my life has to give me a rate of return on an annual basis in order to pay my bills. So I had to come up with a way for doing it myself. That's where my money comes from. A solid strategy for your main investments. Thank you, Charles. If you could only buy one dividend stock, would it be and why? 14 cents. Thank you. I don't have an answer for that one. If it was only one stock, what would it be? At this moment, it would probably have to be Macy's because it's so predictable and it's been so good to me for the last 3 years. It's quite nice for a dividend, Doug. Okay, never heard of it. What controls the stocks to go up or down in such a small increments? Buyers and sellers. We are the buyers, we are the sellers. Okay, whatever the stock is offered at is what the movement is. Okay, big dollar stocks have big dollar moves. Small dollar stocks have small dollar moves. It's just percentages. Okay. Doug, welcome. Luke. Okay. Could you also look at MSA? Never heard of it. Okay. Good evening. Thank you, Jimmy. I think I'll live better knowing that. All these finance peoples are scammers. Thank you. If you could predictably trade successfully, you wouldn't be on YouTube trying to get money from viewers. Because see, now I'm a little offended. Because not once have you ever heard me say, I'm selling something. I want you to buy something. You're making assumptions and you're totally wrong. Okay? I'm not here selling anything to anybody. I'm here passing along information for free. I'm creating a video log for my children and my grandchildren. So when I am gone 10, 15, 20, 30 years from now, they will have something to look back at and say, how do you do this? Stock market's been around for 400 years. When I'm gone in 30 years, okay, my children, grandchildren, great-grandchildren will still be able to watch these videos. Now, I showed a video a little while ago of me 15 years ago. Well, in 15 years, I'll show you videos of me 30 years ago. Okay, it's all the same. Great strategy. Thanks, Luke. I got stuck in CRCL. We are down. Okay, sorry, dude. That's not a company I would buy. Have you ever tried the strategy in the bear market? Okay, you think that we haven't had a bear market in the last 15 years? Well, of course we have. Okay, stocks have been around for over 400 years. Okay, you buy a stock, you collect a dividend. Now, the funny thing, okay, a lot of people get some kind of misconception of this. Okay, you got a company like, let's say, GPC, Genuine Parts Corporation. This company has increased its profits. Let me get this right. Seven decades. Now, you honestly cannot look me in the eye and tell me we have not had a bear market in the last 70 years. Okay? There's a whole bunch of companies that have been in business for over 100 years. Coca-Cola, Pepsi, General Motors, AT&T, Wells Fargo, Bank of America, Ford, Home Depot, Lowe's. I can go on and on and on. These companies have consistently increased their profits for more than 5 decades. So 5 decades, yeah, we've had plenty of recessions, corrections, what the heck is this thing? It's not working. Pullback, whatever you want to call it. So yeah, it works in a bear market just as well as it works in a bull market. Okay, just a little different approach. Covered calls are perfect in a bear market. Absolutely, Bodie. All right, what else we got? I got Netflix yesterday, $2, but $1,200, and like, okay, fine. All right. Bodie. All right. Does he talk about the best way to enter a stock? It is easy to not worry about covered calls when you have owned the stock for 10 plus years and the cost basis is fractional on the cover. Oh, no, Bodie. You're under the impression that I've held these stocks for years. No. The longest I've ever held anything is 1 year. Now it's Kohl's, because Kohl's kept giving me 1 to 2% every single week. Most of the stocks I've owned for less than 30 days. Some of them less than a week or two. Okay, say no, I don't. Yeah. Bitto, WBA. No, I don't do Bitto. WBA no longer. MRO. Marathon. MRO. Lowe's, Bitto, WBA. Okay. Consistent profitability, sure. Credit Suisse was a very consistent and profitable bank until the very day it was bought by UBS. Like it stopped existing. What's your opinion on such bonds? Wait a minute. You went from one conversation to another. Thanks for the knowledge. You're welcome. Rod, is it okay to invest long-term in dividend stocks? Well, you could do whatever you want. Okay. Now, you can do whatever you want. Okay. This is what I've been doing for the past 15 years. It works for me. Okay. I come from the age group called the Gen Xers. Okay. We got a belief that if it ain't broke, don't fix it. If it's working fine, leave it alone. I have no desire whatsoever to look at any new strategies whatsoever, because I will be sitting there trying to figure out new stuff. Okay, fine, great. Now it's going to have more time, more money, more energy. Yeah, no, thank you. I'm perfectly okay. All right. You're welcome, Rod. So let's go see what kind of questions we missed over here in TikTok. Say, where are we? All right, let's see what we got. Flybiter, hi, just found you. Can you give a 60-second overview of your program? Oh, sure. You ready? I'm investing in dividend stocks for weekly cash flow using nothing but pre-qualified dividend stocks. Those are companies that have consistently increased their profits for at least 20 consecutive years. Now, I buy them just before the EX dividend date, because just before the EX dividend date, stock has a tendency to go up. Now, I use what's called a covered call because it's simple, safe, predictable, consistent. 1% a week was what I'm looking for. What do you think? That was 30 seconds. Can you lose on a covered call? Absolutely. The way most people lose on covered calls. Are you ready for this? They hit the wrong button. Thoughts on holding FNILX? No cost S&P. No, I don't do the S&P 500 index fund. Nope, sorry. All right. Steve Martinez, I've made over 6% in 3 weeks on Coles. I love Coles. I do. Any opinion, any options on your mind? Yeah, a whole bunch of them. I don't know quite what you understand. All right. Color. Do you ever get 52% ROI in a week? No. Richard, how you doing? What's the stock? The stock right there is Macy's. I have chicken stock. Okay, whatever. All right. Do you consider open interest? Nope, not at all. What is the symbol of stock? M. Which stock? M. Macy's. Where do you find the list? Eagle 18. You were on the other channel, dude. I already answered that question. 86. Good evening. Do you own those stocks for covered calls or do you use leaps? Very rarely will I use leaps, okay, because they expire also. And you need to get a certain amount every single week to cover the, the time decay, the theta decay. Okay, so as the time, oh, here you go, you ready? As the sands goes through the hourglass, so does the value of our leaps. The value of a leap decreases every single day. So you buy it, fine. I have 2 of them at the moment using it as an example only. Can I access your computer and course on your website? Absolutely, dog. What is this $3 stock? 86, that was, RILY, RILY. Thank you, Laurie. Stevie, what's happening? Okay, dog, I already talked to you that. Alibaba. Alibaba only has 2 years of dividends. So I don't really do Alibaba. Haven't been here in forever. Aaron, wow, haven't seen you in a while. Can I access? Okay, dog, you asked me that question 3 times. Knows his stuff. Been here for an hour. Thank you. We got 4 minutes. I'm going to see how many of these questions I can go through. Florida, Georgia, cross country. Thank you for that. Thank you. Black Acre Esquire. Paper trading here. Bought 100 target. How do I choose the strike price? More than likely, you choose the exact same price you paid for it. So if you paid, what's target? TGT. If you paid $103.85 for target, see, 103.85, I do the 104s. It's the closest strike price to it. That's me personally. I can't tell you what to do, but that's what I would do. 86, Esquire, no, same strike price, 1%. Yep. 1.7. Okay. Where are we? Best dividend stock. I'd have to say Macy's at this time. What are your best dividend stocks? Those would be the dividend kings. Day trading is dangerous. ODM, yeah, absolutely. Gonzalez, Gorias. Why would you not do a poor man's covered call over the traditional? Well, because the option expires. Okay, to do a poor man's covered call, you have to buy a LEAP, which is a long equities advanced participation plan, whatever you call it. It's an option way out in the distance. So let's say hypothetically the 20th of March. Okay, so I take a look at Target and I buy 20 March, which is way down here. 20 March right there, 262 days away. I could buy it 104. I could buy the 105, so it's cost me $12.90. Well, that $12.90 every single week is slowly going to decay to 0. If I buy the stock, yeah, it's going to cost me $103, but I will own it until the day I die or the day I sell it. Okay? So, although a lot of people like doing the poor man's covered call, which can be very profitable. Okay, I just answered that question. He considers other data 50 profitable companies. Okay. Year, UPS, love UPS. Ray, trading off moving averages, okay? It all depends on what you want to do. Ray, if it works for you, great. I trade off of momentum, okay? Get profit taking. Profit taking, you cannot deny profit taking. If a stock jumps up 10, 15, 20%, you're going to have guys like me and some of the guys in the audience. Like if it goes up 5, 10, 15%, I'm going to take my profits. And then the stock drops. If enough people take profits, stocks drop. And it gets down to a certain point, 90? Well, stock's never been at 90. Let me buy some. So we buy some and then the stock goes back up again. Ray, 10, 20, 50, 20. I have no idea what that means. Vimy, can you give examples of stocks you trade for options? Macy's, Target, Ford, General Motors, IBM, AT&T, Home Depot, Lowe's, Foot Locker, IBM, Southern Company. I could go on. There's about 300 of them. Keep on keeping. No, where was I? MRK, all these questions. Club Med Tom, I don't see a question at Club Med Tom. I see you saying please, but could you share the strategist with us as well? Oh, he's going to give me the name. Probably won't get it till tomorrow. How long do you hold shares for each play ideally? 5 days. Monday, jump in. Friday, get out. Strategist name would be great. Yes, it would be. Okay, I don't have it either. How are you constantly getting 52% per year if Warren Buffett only averages 20? Warren Buffett has a different trading strategy than I do. Yeah, Tom, I know it's challenging to find a strategist. Do you ever a stop loss? No, never, ever, ever, ever have I ever used a stop loss. Okay, stop loss, in my humble opinion, this is just my humble opinion, those are people who don't really trust their own decisions. Okay, rule number 1, for me, never buy something you don't understand. When I mean understand, it's like you need to understand everything about it. What's the high of the year? 170. What's the low of the year? 90. That is almost a 46% drop. 46% drop. If you're not okay with a 46% drop in a company that you like, don't buy it. Because you should know everything about a company and be okay with everything about the company before you buy anything. Now, I don't mind buying Target. I don't mind that the high was 170 and the low is 90. Because I'm not holding it for a long period of time. I'm holding for 5, maybe 10, 15 days. That's it. Because as the stocks go up, let's zoom into this for a second. Okay? See, down, up, down, up, down, up, down, up. Okay? So when I'm looking at a stock such as Target, okay, I buy it when it's low, not at the bottom. I don't buy bottoms because you hit the bottom 2 days up, then I jump in on the third day. Go up, when I make my 1 or 2%, I jump out. I use a covered call. Does it work? Great. And then I move it into the next week. And then I move it into the next week. And then I get rid of it. I don't want to hold on to anything for a long period of time because they go up and then they go down. And then they go up and then they go down. If you find a good stock, just follow it. When it's down, that's when you should buy it. When it goes up, that's when you should sell. You have to figure out what is the right entry and what is the right exit for you. Do I use EMAs? No, I do not. I'm just starting day trading. Good luck with that one, kiddo. I don't do day trading. I tried that years ago. No, thank you. All right. What do you do if the stock goes down? You still hold a stock for more than 5 days? Absolutely. Because that's what stocks do. They go up and then they go down. When the stock goes down, I lower my strike price because I want a cash flow. Whatever the strike price drops to. If I buy it at 102 and then it drops down to 92, well, I'm going to be selling the 95s and 96s until it comes back up again. Wouldn't you make more just adjusting your stop limits? Absolutely. I don't use stop limits. And if I could make a lot more. Okay, see, you're misunderstanding what I'm doing. I could make a lot of money sitting at home in front of the computer doing this all day. I could. I have no desire. I want to make 1%. That's it. Make my 1%, I'm done for the week. That's it. Why is it that people don't understand that? Okay, at some point in your life, money no longer has the driving force that you guys have. When you're retired, okay, I know exactly what my payments are, my mortgage payments, my gas, my food, my shelter, my clothing. I know what all of those are. Well, I'm making X amount, which is more than I need. Why? I can't take it with me when I go. I've never, ever. So here in the chat, I'm going to give $100 to the very first person who can tell me when is the last time you've seen a hearse with a U-Haul. Anyone in the chat want $100? Tell me when you got a picture of a hearse with a U-Haul. Seriously, when you go, you're not taking it with you. So why would I waste my time sitting in front of the computer trying to get a few dollars here, a few dollars there? Absolutely. You don't see U-Hauls behind hearses. Lost me. Good luck. Okay. Where are we? All right. Pete, 1%. So you're investing a lot. That's why people don't understand. Okay. So Pete, whether I invest $100 and make 1%, or whether I invest $100,000 and I make 1%, it's irrelevant. 1% is 1%. And 1% every single week is 50% a year or more. Okay, so if I'm starting out with $100 at the end of the year, I'll have 150. If I'm starting out with 20,000 at the end of the year, I'll have 30,000. Okay, 1% is 1% no matter how you look at it. It's past 11 o'clock. I am done. How did you lose money 3 times this year? Not paying attention, and I hit the wrong button. All right. So we're done for tonight. I'll catch you guys in the morning over here on Zoom. And you guys over here, have a great night. We'll see you later. And now the end is here. And so I face the final curtain. He went full port. I have no idea what that means. My friends, I'll say it clear. I'll state my case.